Hi, Terry Ryder from Hotspotting. This is the second in a series of broadcasts to respond to the many questions I was asked during our webinar on Tuesday, that's 24th of March, early this week. That webinar in which I spoke with buyer's agent Rich Harvey from Property Buyer about the impacts of the virus crisis on real estate was the most watched webinar ever staged by Hotspotting. We had lots of questions coming in live from the record number of registrants that we had. We answered as many of them as we could during the webinar live, but we didn't get to all of them. So in this series of daily broadcasts, of which this is the second, I'm going to respond directly to many of the questions that were received during that virus crisis webinar. So some of our viewers asked questions about specific locations. For example, Phil commented that the Gold Coast has been flat for a long time with that turnaround, and my response is there's actually been some quite good price growth in Gold Coast markets in the past 12 months, but not in the high-rise apartment market in iconic locations like Surfers Paradise. And because of the reliance of the Gold Coast economy on tourism and hospitality, that high-rise market will be further impacted by the current circumstances. And it's worth noting that the median price of an apartment in Surfers Paradise today is the same as it was 10 years ago, and it's not going to improve in the short term. Michelle asked about the market in Tamworth in regional New South Wales. And as a general statement, I expect regional markets to be less dramatically affected by the virus crisis than our big cities. The coronavirus itself is less prevalent there, and many regional centres, tourism and hospitality is not such a big part of the economy. But Tamworth specifically has been impacted recently by drought, and tourism is quite a significant part of the economy there, so I expect that market to be fairly subdued for a while. Prices have dropped there in the last 12 months and vacancies are rising, so that market may struggle in the short term. Shanaz asked, is Brisbane still a good option given that tourism will be the worst hit? Now, Brisbane is definitely coming into a growth period. Most of the key data shows prices rising and a definite uplift in sales activity. The population data is strong for Brisbane now, and there's been a notable pickup in spending on big new infrastructure, which is a key factor. Vacancies, which were high previously, have come down significantly. The virus impact may cause a pause in the rise of the Brisbane market, which would make it a good time to buy right now with confidence that there will be growth in the near future. Now, Marty made these comments. Over the next few months, if you find yourself unable to keep up with your loans, get on the front foot and call the credit provider early. This will not only relieve some pressure as you won't be living in fear of what they might do, but will most likely help you protect your credit file in the process. And I think that's sound advice. The major lenders have made it clear that they want to help their mortgage customers as well as businesses because they have a strong vested interest in keeping their customers healthy. So anyone who's struggling with loan repayments should contact their lenders and work out a solution with them. The major banks are indicating that they will allow people to pause their repayments for a period of time. Tamara says, if investors take advantage of the 6 months loan interest deferral, is it likely to adversely impact their credit rating or ability to finance in the future? And Rulan asked a similar question, will it affect my credit rating if I do that? So I put that question to leading mortgage broker Louise Lucas of the Property Education Company, and she said that APRA has told lenders that those who take a holiday on their repayments will not be penalised on their credit file with this information. However, every lender will know exactly what went on, so they will assess borrowers on the strength of their new position, and lenders will not be relying on old financials but the new and very up-to-date figures. So as long as people come back strongly after the pause, they should be fine. Rob Duncan's asked, what should landlords do if tenant advises they can't pay their rent? And I don't think it's possible to give a generalised answer to that because it needs to be handled on a case-by-case basis. I think a lot of the emphasis in the various stimulus packages from government is on assisting people in those situations. The benefits for people out of work have been significantly increased to avoid situations where people can't pay their rent. But for any landlords in those situations, you should be able to work it out with your tenants or your property manager and come up with a solution such as perhaps a pause on rentals for a short period. Now, as someone who owns investment properties myself, I've phoned all the property managers and asked about the situations with the tenants, and they all seem to be okay. But if any of them do get into a period of difficulty, I will work with them through the property manager to work out a solution, perhaps providing a rental holiday for a period of time, given that the solution is likely to be temporary. And I also know that governments are working on packages to help those in difficulty. Now, Frida suggested that the buyer's agent's panelist on the webinar, that's Rich Harvey, had a vested interest in people continuing to buy, and asked, do I have any particular vested interest in having a fairly bullish summary of what I think is coming up for property? And my response is, well, probably a fair question, a little bit cynical. I certainly believe Rich Harvey has a track record of being upfront and telling it like it is, and he gave a fairly frank assessment of the virus impact in the webinar, essentially a short, sharp downturn followed by a recovery. And I broadly agree with that. My own viewpoint comes from 35 years as a researcher, writer and author with an emphasis on consumer protection. I've built my reputation on telling it like it is, or as I see it, without vested interest. And I've observed over the years the resilience of real estate in the face of financial crisis, recessions, natural disasters, a host of other calamities. I think it's a time for cool heads and sensible strategies rather than the alarmist views that are inevitably emerging. Lots of questions about the impact of unemployment on property markets. Now, if it's really high long term and entrenched for a long period, then certainly there will be impacts, but I believe it will be short term, relatively speaking, and that it shouldn't impact real estates too dramatically. Some people are asking about waiting to see how low it would go and timing their entry to the market, and I think that kind of approach is fraught with difficulty because it's always impossible to pinpoint the bottom of the market. The data that shows where the trough is doesn't appear in medium to a long term after the event, and I think a better approach is to look for good buying opportunities in areas with credentials for long-term growth. Stephen asks, what is your take on people losing their jobs who have a mortgage? Will they lose their homes? And if so, will they get a rental in such a tight rental market? And I think one of the key factors in the response from the federal government and the major banks is to support people who lose their jobs and have difficulty paying the mortgage. Lenders have said they will offer mortgage holidays, suspending payments for 6 months, for example. And the tight rental markets are being eased to a certain extent by investors who previously used Airbnb and now putting their properties into the permanent rental pool because the travel restrictions are killing the Airbnb market. Now, I want to add on a positive note. We're all drowning in negativity at the moment, with media having a field day with negative sensationalism, as if the basic situation isn't sensationalist enough, or by the usual lineup of ego-driven attention seekers who are exploiting the situation with cheap publicity, like Bill Evans from Westpac, who is the most chronically negative human being in Australia. And I urge you to ignore any of his forecasts, or like Shane Oliver from AMP Capital, who has the worst track record in the nation for making predictions about Australian real estate. So getting away from all that, let's note a couple of strong positives. In yesterday's broadcast, I listed a number of entities, businesses that are booming and need to hire many thousands of new staff members. Companies like BHP and Telstra, and of course Centrelink, which needs to urgently hire at least 5,000 people. So ironically, if you find yourself out of work, you can get a job at Centrelink helping people who find themselves out of work. But further to all that, today Coles announced that it's hiring new people and so far has taken on 7,000 new staff members in the past 2 weeks. Woolworths says it has 20,000 new positions available, and Aldi, another supermarket chain, is also hiring new staff. Also, more directly to real estate, it was announced today that a property in Victoria has been sold by an online auction, $52,000 above the reserve. A property in the Geelong area with a reserve price of $815,000 sold in an online auction for $867,000. So there are people out there who are innovating and finding ways to function in the current circumstances. So that's it for now. If you have any questions or comments, you can contact me, Terry Ryder, on ryder@hotspotting.com.au. Would welcome receiving your comments or your questions, and I'll do my best to respond to anyone who contacts me on ryder@hotspotting.com.au. That's it for now. We'll do another broadcast in the next day or two, continuing the series of responding to the questions we got in that very well attended webinar on Tuesday, the questions about the impact of the virus crisis on real estate. That's it for now. Bye for now.